Hi guys, you are welcome to my channel. Today we'll be looking at how we can trade gold. All right. For the last video, I talked about the top-down analysis on how to trade gold, where you get to review the market structures on the time frames, and then you start your review from the higher time frames down to the lower time frames. A quick recap on that. If you look at the monthly time frame, price of gold is bullish. On the weekly time frame, price of gold is ranging. We can see kind of range, okay, for the weekly time frame. For the daily time frame, the price of gold is currently bullish. All right. For the 4-hour time frame, price of gold, we can see a kind of range around this point, and see a range around this point was bearish, okay, but now we have a range, and this might possibly turn bullish. All right, that's for the 4-hour time frame. Quickly, let's look at the 1-hour time frame. Ranging, as of gold is ranging on the 1-hour time frame, and on the 30 minutes time frame, you can see a kind of range as well. Range, no definite pattern. So that's a quick recap on the top down analysis, where you get to look at how the price is moving on the time frames, okay, whether it's moving in a bullish pattern or manner, or in a bearish manner, or whether it's ranging. All right, so you can take a look at you can go to my last or the previous video to learn more on how to do that. All right, the next topic we discussed in the last video is the candle color and momentum, where I spoke about you reviewing the population or numbers of the green candles compared with that of the red candles. Also check the candle length and wicks for information. So looking at that on the monthly time frame, if we look at the numbers of the green candles, all right, we have more green candles on this chart compared to that of the red candles. And we can see the wick, we can see candle wick formation. There's a wick formation here. There's another wick formation, candle wick. Okay, you can see another wick formation, more like this is a zone where price gets to and drops, drops. So it's bullish, but we are seeing like a resistance that price is forming on the monthly chart. On the weekly chart, the resistance is around here on the weekly chart, and we have more green candles on this very chart. All right, on the daily chart, what we have some red candles, we have some green candles, more like balanced, but it's more like balanced, but we have some form of resistance. You can see resistance around here. Okay, candle formation, we can see another resistance around here. You can see a support around here. All right, you can see a previous daily candle here. You can see more like a resistance. Okay, but looking at the momentum, we have bullish momentum with this candle. It's a bullish momentum. All right, a bearish momentum with this particular candle on the daily time frame. So that's for the candle color and momentum, how to monitor that to know how to trade. Of course, when you see bearish momentum, you can always enter your sell trade. Where you see bullish momentum, you can always enter your buy trade. Okay, the candle wick, this candle wick, the wicks, you can looking at more like the zone, a resistance zone or a support zone. All right, so that's that for the previous topic. But today, all right, today we'll be looking at how to plot the trend lines on the chart. All right, of course, we can always start from the monthly chart, can also plot trend lines on the weekly chart, then we might also plot trend lines on the daily, the 4-hour, the 1 hour, 30 minutes. Okay, but you drag the trend line tools Okay, you drag the trend lines tool from the left side of the price chart to the right side, from one candlestick week to another, from tip to tip. Note trend line breakouts by price for trade entry. All right, so taking a look at the monthly time frame, if we are going to draw our trend line, this is the candle week, this is another candle week, and this is another one. So from tip of the candle week, you can draw your trend line. Okay, from tip to tip, this is the trend line too. You can plot it and drag from the left side of the chart towards the right side. Okay, and then you can extend it, right click on the trend line tool and then click extension. All right, or click the ray, okay, for the trend line to move forward towards the right side. Okay, so that's the trend line for the monthly time frame. For the monthly time frame, that's the resistance trend line. Okay, we can plot this as our supporting trend line. Okay, on the monthly time frame, we expect price to touch either the resistance trend line or the support trend line for a possible reversal or turn. Okay, if it touches the resistance trend line, we might see price turning towards the supporting trend until we have a breakout. Of course, you monitor the breakout for trade entry. This is a monthly time frame. On the weekly time frame, to draw your trend line, drag from the left side at the candle wick tip, okay, to another candle wick tip like you have around here, and then you can also draw the supporting trend line, drag from here. We are on the weekly time frame. All right, so that shows that price is ranging towards a breaking point around here on the weekly time frame. On the daily time frame, to plot the trend line, you drag from tip to tip, okay, like what we have around here. Okay, and you can also drag from here. Okay, let's drag from here to, okay, let's make it from this particular point to this particular point. Okay, you can see on the daily time frame, dragging the trend line from tip to tip, this is what we have. We expect a breakout, trend line breakout, where we might likely enter a trade. Okay, on the 4-hour time frame, we can see how to drag the trend line from tip to tip on the 4-hour time frame. Also from the left side of the chart towards the right side. Okay, we might also expect a breakout. Price could possibly move from here to here and break out towards the top, or drop down and break towards the bottom. Okay, so that's that for the 4-hour time frame. Now to plot the trend line. Okay, let's look at the 1-hour time frame, if we can see any clue on how to plot trend line. Of course, from the candle wick tip, all right, to the next tip. The next tip is around here, and then you can also plot from here to here, from one tip to another, from this tip to this tip. Okay, now you expect price to break above here or drop towards this point. All right, you can also narrow it down the 1-hour time frame from here to here. So the first break will be around here. The second break might possibly happen here if price is going to drop, but if price is going to rise, we have just one trend line at the top, which is like your resistance trend line, which is your descending trend line. Okay, this is your ascending trend line. Of course, your descending trend line is your resistance trend line, while your ascending trend line is your support trend line. Okay, that's that for the 1-hour time frame. For the 30 minutes time frame, how can we plot the trend line? Drag from the left side towards the right, from tip, this candle wick tip, to this candle wick tip. Okay, and then also drag from here to there. All right, from this candle wick tip to this candle wick. Of course, you might want to try dragging from here to here, but price will have a long way to drop before it gets to this. And price needs to break this particular trend line first before getting to this trend line. Okay, so we might expect price to either break this trend line for us to buy, place a buy trade, or price break this for us to place a sell trade. All right. So basically, trend line might guide you on how to take your trade entry. All right. For this particular chart, which is a 15 minutes time frame, you can draw your trend line from tip, candle tip, drag it from the left side, this candle tip, towards the right side to this candle, the nearest candle tip. Okay. On the right side, of course, we have a trend line around here. This is being broken. This particular trend line is being broken, so I expect price to move up a bit. And also, what might support our decision to try to buy around this point is on the 15 minutes time frame is this particular bullish pin bar, this bullish candlestick. I beg your pardon. This candlestick is engulfing this candle, so we might see price going up. And also the trend line is currently being broken. The trend line from this candle tip to this candle tip, I'm talking about this descending trend line, which is our resistance trend line, is currently being broken. So if resistance trend line is broken, if it is broken, that means you might take a buy, might place a buy trade. Where can you possibly place your stop loss? Your stop loss might be below below the low of this bullish engulfing candlestick. Your take profit might be to this particular candle wick. Okay, the top of this candle wick might be your take profit. All right, so that's that on how to plot the trend lines on the chart. You drag the trend line tool from the left side of the price chart to the right side, from one candlestick wick to another, from tip to tip. No trend line breakout by price for trade entry, and that is what we are looking at. We are seeing a trade. We have identified a possible trade entry here. Now, you don't just rush to enter your buy position. At times, when the trend line is broken, it might get broken for us to have a candle wick lapping across the trend line. Then we have a bearish candle. That's not the right time for you to enter your trade. You wait for the candle, the price to break above the trend line and close above the trend line, not break above the trend line and close below the trend line. If it breaks above the trend line and close below the trend line, we might see a reversal, and then your stop loss might get taken out. But wait for it to break above and close above that trend line before you take your trade. All right, so that's that for plotting the trend lines on the chart. Let's take a look at the next one, which is identify the price liquidity zones. Okay, identify the price liquidity zones. Check for areas on the chart where price has formed pin bars. This may be bearish or bullish pin bars. These zones of pin bars are known as liquidity zones. Price may attempt to reach or test these zones for clearance. Okay, so let's take a look. Let's start from the monthly time frame. Looking at the text, it says identify price liquidity zones. Check for areas on chart where price has formed pin bars. Okay, what are pin bars? This is a pin bar. This candlestick is a pin bar where it has a small body but a long wick. Okay, that's a pin bar. This is another pin bar. It has a small candle, long wick, a small candle, long wick, where the wick is longer than the body of the candle. That's your pin bar. This is another pin bar where the candle wick is longer than the body. This is another pin bar. This is another pin bar. So this is a monthly time frame for gold chart. So we identify the pin bars. The text says identify the price liquidity zones. Okay, so in as much as this is a doji, not a pin bar, this is a pin bar, this is a pin bar, so this is a price liquidity zone. Okay, all right, so this zone on the chart is our price liquidity zone. What do I mean by price liquidity zone? Is a zone where we have orders, we have entries. Like here, around here, this is a liquidity area where you have this pin bar. So you have enough stop losses around here by the sellers. Okay, if once you know this price liquidity zone, you might monitor price movement. You might see price clearing that zone before dropping. All right. Okay, price might likely clear the liquidity zone. This is a zone where you have sellers placing all their stop losses above that level. So price might clear that zone before dropping, or price might clear that zone and continue to go up, or price might test that zone. A possibility that price might test that zone and drop, which is what happened around here. So identify price liquidity zone. This is a price liquidity zone by the buyers. Okay, the buyers were able to place their let me change this color here to red. Okay, so buyers place their stop losses below this zone as at the time this pin bar was formed. Okay, as at the time this particular pin bar was formed, let me move this a bit. So as at the time this particular pin bar was formed, buyers placed their stop losses below that pin bar, and you can see what price the price cleared, okay, that zone, and then price started to go back up. So price is always trying to get and clear liquidity zones. It might go away from that zone for a long time, but definitely one day price will come to that zone and clear it and then turn. So if you can identify such zones, you might find your trade entry around there, knowing fully well that price will clear it and go back up. So you might enter your trade whether you're buying or you're selling. As for the monthly time frame, let's look at the price. Let's look out for the price liquidity zones on the weekly time frame. Do we have any pin bar around there? This is a pin bar. This is a price liquidity zone, okay, where you have buyers placing their stop losses below this level. You have buyers placing their stop losses around here, and that got taken out around there, and you can see what happened. Price went up. Okay, this is on the weekly time frame. This is another price liquidity zone. All right, you have so many buyers already laying their stop losses below this level. So one day you might expect price to drop and clear that zone for price to now go back up. Okay, so that's that for the for the weekly time frame. Another one on the weekly time frame is this particular zone on the weekly time frame, price liquidity zone. You can see what happened around here, price liquidity zone, where sellers or people that go short place their stop losses above that zone. This is also another zone where sellers or people that go short, okay, place their stop losses above that zone. You can see this zone got cleared by price, and price retraced. Okay, and you can see leaving another zone, but this zone is yet to be cleared by price. So we might see price clearing that zone sooner than expected, and by the time price clears that zone, we expect price to drop a little before going back up. But this zone is yet to be cleared. I'm talking about the 2065 area on the gold chart. Let's take a look at the daily time frame. Do we have zones? Okay, this is a price liquidity zone where you have a candle wick, and the zone has been cleared. Okay, and you can see price dropping. This another zone around here yet to be cleared, but so many stop losses on above this point on the daily chart. So we might see price get into that zone. I'm talking about this liquidity zone. I'm talking about the 2003 area. Okay, price might clear that area, then price might drop for price to form another low, and then price might continue to go up. So that's that for the daily time frame. Is there any liquidity zone? We have a liquidity zone around here, this particular pin bar. We have sellers already lining up around here, trying to place their stop losses below that level. Okay, You have sellers placing their stop losses below that level. I'm talking about this particular liquidity zone around the 1930 area. So many stop losses around here. We can see price dropping towards that level, clearing it, and then trying to go up. So around liquidity zones, whether bullish liquidity zone or bearish liquidity zone, you see price getting to that zone, clearing that zone, and then going back the way it came back from. So that's that for the daily time frame. Let's quickly look at the 4-hour time frame. If you can see any liquidity zone, you can see a pin bar around here. All right, it's a liquidity zone that has been cleared around here. I'm talking about this zone. Okay, that has been cleared. All right, so many stop losses of the sellers around there, and the buyers, the price took out that zone. You can see another zone around here. This is another zone, but yet to be cleared. This zone is yet to be cleared. Rather, price tested that zone and price returned back to where it came from. So price might still attempt to drop to clear this zone. I'm talking about the on the 4-hour time frame. I'm talking about the 1955 zone. It's a liquidity zone that is yet to be cleared, and price is currently going up. That's that for the 4-hour time frame. Let's quickly look at the 1-hour time frame if there's any liquidity zone. On the 1-hour time frame, we have this particular liquidity zone. I'm talking about the 1976 level. It's a liquidity zone that we have so many stop losses by the sellers around here. So many stop losses above this level where sellers have placed their stop losses, and we expect price to go to that level and clear it, and then possibly we might see a drop. Okay, so if price clears that zone, you might enter your sell trade around here to ride it to some point before price continues to go up. We have liquidity zones around here. This is another liquidity zone. We have the liquidity zone here where the buyers have their stop losses. I'm talking about the 1955 or 56 area. It's another liquidity zone. I'm talking about the 1955 level. We have so many stop losses around here. Price might likely come down to clear that zone, and then by the time that zone gets cleared, you might enter your buy trade to ride the trade to some point before it starts to drop. So that's for how to trade gold using the identification of the price liquidity zones. Click check for areas on the chart where price has formed pin bars. These may be bearish or bullish pin bars. These zones of pin bars are known as the liquidity zones. Price may attempt to reach these zones, reach or test these zones for clearance. So if you can identify a liquidity zone, try to work out whether you're placing a buy trade or a sell trade, or probably you are riding the trend towards that zone once you spot that price is moving towards that zone in a kind of momentum. All right, we also discussed plotting the trend lines on the chart. You always drag the trend line from the left side of the price chart to the right side, from one candlestick wick to another, from tip to tip. No trend line breakout by price for trade entry. So that's that for today's video. If you like what you just saw, you might just go ahead and smash the subscribe button if you are yet to subscribe to the channel. A big thank you to all our current subscribers. We say a big thank you to you for holding forth, for subscribing to the channel. If you like this video, go ahead and smash the like button. Also click the bell button below the video for notification, so that when we release another video, you'll be notified. You can drop a comment below the video, ask questions. We'll try as much as possible to respond to your questions. We also have our website, www.pinfxtrader.com. You can visit that website to learn more on how to trade gold. You can also visit another website of ours, fxfables.com, to learn more on how to trade gold. Till I come your way next time, it's bye for now.